Welcome, everyone, to episode 10 of Mastering Metal. So good to have you here with me tonight. We're going to have another fun and educational session on gold and silver investing. You're going to love it tonight. And I just want to shout out Mark Briggs in the chat said, "Good evening, all you crazy stackers." I love that comment right in there in the chat. Feel free to keep putting stuff in there. We're going to have a lot of fun. I am pleased, as always, to have my colleague, Mukarram Mawjood, join me in just a second here. Mukarram is the head of trading at Bullionite and the chief investment officer at Blackstone Commodity Group. And this is going to be fun, guys. If this is the very first time you've been on my live stream, Mastering Metals with Mukarram, please put first in the chat. First, so I can shout you out. Love to see you. And I do appreciate all the first timers that come in to watch us. So this live stream is really it's a deeper dive, okay, into the gold and silver markets, deeper than I go on into than my Ask Yankee live streams, deeper even in some ways than Silver Pros. And Mukarram, He's such an expert. He shares some technical analysis with us on both the yellow and white metals. Okay, nothing, anything super complex, just some trends, and he helps us understand what has happened and what might be coming in the future. So we'll look at that. We'll also look at what could be affecting the precious metals at a macroeconomic and even geopolitical level. So we're going to cover a lot of ground here tonight. But hey, let's first welcome in our guest, Mukarram. Great to see you, my friend.
How are you, Yankee?
I'm doing great, man. This has been an interesting time since our last meeting. We've gone a little bit longer. I think we had some personal stuff. I was traveling just a bit, so we didn't get to mastering metals as our normally in June, but here we are, July 1st, and it's great to have you here, man.
Thank you, Yankee. I appreciate it. And I always love being here and getting all the questions and going through all of the different market volatilities, right?
Yeah, we got a lot to talk about, and I do see in the chat one, two, three, four, five, six, seven, eight, at least 8 or 9 people, first timers here on Mastering Metals. So that's always great to see, and we have a lot of people coming back.
If you see me glancing over, it's because I'm looking at the chat screen and the questions that come up. Okay, so keep that in mind.
Yeah, that's fine. I do want to let especially the first timers know, but remind those who watch Mastering Metals know that we break this stream down into 3 segments, and hopefully these segments really provide a lot of value for everyone watching tonight. The first segment is macros. Markets and macros. This is where we discuss the news and the trends affecting precious metals. So markets and macros. Second one, retirement insights. This is really important especially for us older folk who are looking at retirement accounts, IRAs, 401ks, trying to decide what to do with them and how precious metals might be able to fit in with those decisions. And then finally, the third is the question and answer time. So that's a lot of fun. I think you enjoy that more than the other two, but maybe I'm wrong, Carl.
It's always fun.
It's always fun. So let's just dive into the first segment, markets and macro. A lot's happened since our last meeting on May 20th. Okay. So silver broke down below, I shouldn't say broke down, went below $30 an ounce, right? And we saw gold slip below $2,300 an ounce. You're going to help us understand a little bit about what happened, maybe show us some charts on that. But full disclosure, you and I on our last time we talked, we did a poll. Remember this?
Yeah, I do. I remember that.
Do you remember what the poll was?
Well, I think there were 2 segments to the poll. I mean, there was one poll, but
Yes,
then there
one
was a
poll.
follow-up question.
Right.
And I loved the poll because when I saw the poll, you had asked, will silver go to 29 or 35? Which number is more? Will it
Hit
get
first?
to first?
Yeah.
Will
Will it hit 35 first
And
or break down into 29? Yeah.
yeah, and then you had mentioned that you believed it could get to 29 first,
I
you
did.
know?
That was my
And
vote.
then
Yeah.
yeah, and then looking at the charts, we said that if it decides to do a correction, because see, as traders, we always have we have to look at both sides, right?
Mm-hmm.
So if it decides to correct, we thought it would go to between 28 and a half and 29 is a really good spot to correct before it goes back up. So we went like, I think I was in agreement with you when you said, according to the poll, you could hit 29 before it hits 35.
Right.
But then the follow-up question, and this is why I want all the viewers to know that we're not afraid to go over stats or like previous discussions we've had just because we don't hit a number, right? Because
Right.
that's credibility of the Yankee show and what we do as individuals who are traders. I want the audience to know that we will always come here and talk about whatever in a transparent fashion. I
You're
think the
not going to
next
forget about stuff we said, two
yeah, we
shows
don't
ago,
forget
right?
that. We don't hide from
Conveniently
things
forget,
when,
right?
and that's a good thing, even when clients work with us.
Right.
Just because when the market turns around, a lot of clients tell me, right, with other companies, they don't get to talk to their individuals or their financial advisors when the markets are tough. It's not like that with us because because we're traders, we understand both sides of the markets and what it means to be there for a client when they're going through different market situations. I think your follow-up question was, Mukarram, but by the time you come back, where do you think the price of silver would be? And then what I said was, if it manages to stay over $30 an ounce or even 32, because
Yep.
it was at 33 and a half, I think, when we were
Mm-hmm.
doing our show.
Mm-hmm.
Because mathematically, if it was over 32, I felt like we'd be closer to 40 than we would be to 30.
I
That's what I said.
remember that. Yep.
Yeah.
Yep.
And I think it's important that because we have a monthly show, right, or we have a
Close to
repeated
it. Yes. Mm-hmm.
session, yeah,
Mm-hmm.
that I explain that because I believe that as long as this correction, and I can show it to you on a chart,
Mm-hmm.
it's what we call an echo pattern. When you break through a major channel and then that resistance turns into support, right? So
Right.
when silver broke through 30 and then it comes back into the 29s, that's just a normal movement. I still believe, especially with the macroeconomic landscape that we are in and all of the fundamentals that are unraveling, I still believe we are definitely on the trajectory to get to 40, okay, which is not a problem
Mm-hmm.
because silver. And why do I say this? Because even when you started the segment today, you said gold's at 2,300. Come on, gold's at 2,300. All of last year, did we ever say gold's at 2,300? Did
No.
we even say gold's at 2,200?
No.
That's what tells me that we have the correct trade here
Mm-hmm.
because gold is the horse that pulls the carriage, right?
Yep.
And it's the leader in the complex. And therefore, whatever correction we see in silver, we see it as a positive, healthy correction.
Yeah, people need to understand the volatility, and I think new stackers sometimes really don't get it. If you want much more stable rise and fall in metals, gold is your place to park your money. Silver is a much more volatile, more speculative, more upside potential, but you gotta ride this out. So yes, we did ask the poll. I think I was on the right side of that. More people voted for 29 over 35. Boy, that 40 sounded nice, but I didn't. I really wondered if we were going to see it quite yet. Anyways, that was full disclosure last time. What do you think now? Do you think I'll bring up the silver chart. This thing, and I know you will too at some point. But look at this thing. Last time we talked, we were really on a rise here, and then at the very end of May, it did some interesting gyration, and then down, big drop, up, big drop. And it just seemed like, okay, here's what it seemed like, Mukarram. It seemed like the traders came flooding in, all right, and they punched it down. They beat it up with a bunch of shorts. The powers that be, the manipulator said, that's enough. This is what I hear. People, complain about this a lot and say this is what's happening. Is that what you see, or is there something else going on here?
Am I to infer that you're saying that there was a lot of shorting going on after that big run? Is that what you're trying to say?
Yeah, yeah.
There
Maybe
is
even
some
some hanky
shorting.
panky going on too.
I'm a futures trader. I mean,
Okay.
I trade futures contracts, so I
Mm-hmm.
know that when certain markets get overheated, um, it does it does look attractive to short a particular market, right? So
Mm-hmm.
I don't think we can say there was no shorting, but I would completely at this point say there's this movement down in silver has nothing to do with a massive shorting of it.
Mm-hmm.
Because here are a couple reasons for that. Number one, you have to be very foolish to short silver after it has closed over $30 an ounce,
Mm-hmm.
after about 6 months or 7 months of consolidating between 26 and 30.
Mm-hmm.
And also after an entire year of consolidating between the low 20s and the high 20s, which is what we said, right? Accumulate as much as you can when the spot price comes towards the low 20s, and then kind of ease up when the spot price gets to the 30. But when it closed over 30,
Mm-hmm.
I think you have to be someone who is not very good at risk management if you begin to short in a big way anything over 30 in silver, or someone who's extremely contrarian, but they may not be holding the right side of the trade on that. Okay.
Mm-hmm.
So I think what you witnessed is a simple in a short-term chart, like a daily, where it got really overheated, overbought, and then the market, some profit taking with short-term traders, market retracing to a previous major resistance level, which has now turned into support and a great position building place. That's what I mean, I'm long silver,
I
so
know you are. Me too. Yep. All right. So I'm sure you're going to show us some market analysis here. Are you going to show us some charts? Anything that
You want the
stands out?
charts now, or do you want to talk? Is there any other talking points, like in terms of fundamentals, you want to cover, or?
Yeah, we can get into the fundamentals first if you want. Talk to me about the Fed. Talk to me about interest rates. Talk to me about
You love the
all the
Fed,
yeah.
Yankee.
No, we don't. And the Fed. Sorry.
Uh,
No, this guy
well,
doesn't love the Fed. I'll tell you that much.
the Fed, oh my goodness. I mean, there's a lot to talk about them. And here's how we'll start this conversation.
Okay,
Um, we did refer to it as a clown show in
I
an early
remember.
part of the year. You
Mm-hmm.
remember that. And
Mm-hmm.
why did we say that, Yankee? Because when you have the Federal Reserve of the United States of America come out in December of last year and very confidently say, we are going to cut rates at least 3 times next year, I thought that was a clown show, by the way. It was very foolish. I was giddy because you could make a lot of money based on that statement, but it didn't make any sense.
Mm-hmm.
And it was also a very weirdly timed, like the timing of it, because you're going into an election year.
Mm-hmm.
Fed, supposedly a neutral organization, right? I don't know how neutral it is in any election year, but
It's
that's not
not.
going to happen. Okay? So
No.
and you asked me that. I remember the first 2 sessions, I think this year that we had, Mastering Metals, you were like, Mukarram, do you really think they're going to cut into? And I said, it doesn't matter if they cut it 3 times, 2 times, 1 time, as long as they cut interest rates this year, you do not want to be holding the wrong side of this trade, meaning you don't want to be
Mm-hmm.
short commodities. You don't want to be, that's why I don't believe that was shorting when silver pulled back, right? So that's one. The other thing
Mm-hmm.
is inflation numbers, whatever, however engineered or not engineered, however it is reported, we have seen certain major economic numbers within the course of a month, right? That have been tepid now. Like they've been showing, according to the Fed's gauge, okay, they're getting a little weaker, they're getting a little moderate.
Mm-hmm.
Maybe it's time to cut rates. We also have, and I've never understood this, a lot of Fed governors going around talking points and talking or having speeches that make no sense,
Mm-hmm.
because they shouldn't influence markets as much as they do, right?
Oh, but they do.
But
Yeah.
at the same time, here's the thing that everyone should understand. The Fed will cut interest rates this year. There's a very high probability they will.
You're
Okay.
you're you're really confident of that. You were confident about that for the last few sessions of Mastering Metals. You keep saying they're gonna cut, and I.
Unless they have my picture somewhere and they say we don't want to prove this guy right, so let's not cut interest
Oh
rates, then
man.
yeah. But I think
Yeah.
fundamentally they will cut interest rates. How many? I think the most likely, when you look at like the kind of the options trading rates and the Chicago Mercantile Exchange and things like that, I think there's a cut in September and a cut in December.
So let me look at I'm going to bring up the FedWatch tool here. So, yeah, they're meeting again in July 31st. Pretty much consensus. So right here, we're at between 525 and 550 basis there. And the consensus, 90% plus, says there's nothing's going to happen. They're going to hold it tight. When you look forward to September, that's when we start to see. Oh, let me switch over. Oh, there's that. Why won't it switch here? Give me a moment. Let me refresh. Maybe they already cut rates and they don't want us to see it on the chart. Look at that. Okay, here we go. Man, all right. So September. Wow. You and I were looking at this before. Did this thing just break?
I don't know.
We were just looking at this before the
So I
show.
love
Kurt,
live stuff.
100%. Okay, so we were at 100%. Now, if we switch to September, it's calculating. Maybe I just need to wait. Maybe they're trying to figure out what to do right now. Look at that. There we go. Wow, that took a long time. September, about 58% say what,
8%.
quarter basis. Quarter basis.
And is that December, the 35.2%?
No, the 32 is holding it tight. No, this is if this 6%
Oh,
say
okay,
they'll
I
drop
get
at
it.
a 0.5%. They 58% or close to 60 say a quarter basis, and about 35% say nope, they're going to hold tight in September. And you get to
I think
November.
September is very likely that I
Okay.
think that makes sense. 58, a
Mm-hmm.
little over I think that percentage might increase, and then they may have
There's
another cut.
November. So at some point, consensus is showing that that's where they're going to go. They're going to cut it. My question to you, Mukarram, is I think they have to cut or else a major catastrophe is coming. My question to you is if they don't cut, will we have another banking crisis? And for that, let me bring this article up before you answer. Look at this. Status of banks. Unrealized losses in Q1. All right. So this is dated May 29th. So we're just about a month old on this. It's from Wolf Street. Love reading their articles. They had a rate cut mania that you were speaking of in the beginning of this year when they announced 3. All right. So everybody was like, oh, this is great. No problem. This will help us with our unrealized losses. These are banks that are holding on to assets, treasuries especially, that they bought with cheap money at around 0. And now they're maturing and they've got more and more losses against mostly commercial real estate. Look at this chart. Look at this. Unrealized gains and losses on securities at commercial banks. Look at what happened starting in 2021, and it just has continued to plummet. As soon as they stopped and raised rates, these unrealized gains and losses spiraled out of control. Now, they're not realized. They actually, they're on the books, right? So if
I'd
you look,
like you to keep that, if you can
yeah,
keep
yeah.
that,
I
because
wanted to show one other thing, but that's fine. You want to keep this up for you?
yeah, because I see something that's very interesting when I look at
Mm-hmm.
that. Because
It's scary to
uh,
me.
well, it is scary. It's very scary. But what I think we want the audience to learn, and because we're in the business of trying to help people,
Mm,
increase their net worth and understand how you can become like create your own destiny, right? Financial destiny. When you look at this, first, I think people need to understand that every time that bar goes lower
mm.
since 2020, you're going to a negative 100 billion, a negative 300 billion, and you're getting to negative 700 billion.
And they
In
add
terms
up
of
each quarter, right? This is
like
yeah.
minus $700 billion in like unrealized losses,
Mm-hmm.
whether it's available for sale or held to maturity.
Mm-hmm.
Now, here's the problem with this. Two things. One, obviously, this is not with one or two banks. This is across the country.
Oh
And
boy.
even if you take major, like big banks, they're holding treasuries or treasury holdings that are this much negative on their books.
Mm-hmm.
Okay. So that's one thing. So you have to understand that. And I want the viewers to understand it's not just one or two banks, or it's not something that's not common. It's across the United States. All the banks have this.
Mm-hmm.
The other thing that to realize here is when you use the word unrealized losses and
Yep.
available for sale, all this nonsense, if you're a citizen, right, or if you are your home and you're taking care of your finances, if you have 100 billion of losses, okay, whether it's unrealized or not, you've made a really bad decision, okay, and you have to fix it. And if you don't know how to fix it, and if you're relying
Mm.
on an outside agency to change their fiscal policy to bail you out,
Mm-hmm. Mm-hmm.
then you're in a lot of trouble.
This should scare all depositors. This should be not just because of Silicon Valley, Signature, First Republic, what was the other one? Silvergate. I mean, those had other issues as well. But like you said, all the banks are holding
All the
on
banks.
to this. And
Yeah.
if they don't, this is back to my question. If they don't cut rates, these unrealized losses are going to become realized. In fact, I was reading an article where a lot of them are starting to try to get rid of some of these commercial loans, commercial properties, and it's being realized. Their books are no longer, it's not unrealized anymore, it's become realized. And when that happens, just like those other banks, when the depositors get word of it, they start getting scared. They start yanking their money out, which causes and I don't want to say the word, I don't want to cause a panic here, but the run on a bank can cause them to have to sell a lot of this stuff at a loss, which just compounds the issue. And we start to see more and more, especially the regional banks, not the too big to fail banks yet, but the regional banks are really going to suffer if they don't cut rates and give relief.
And I think we need to put this in context too, because a lot of people sometimes when we talk about these realities, right, or when we discuss these realities, some people accuse us of fear mongering
Hmm.
or saying these things. But first, understand that this happened in 2012, 13 in Greece, in Spain,
Hmm.
with Banco Santander, and then Greece when it was the entire country was becoming illiquid. Um, you could see lines upon lines of people at
Hmm.
ATMs and bank doors shut, right? And they are European Union countries. So they're not obscure countries where the economies are really bad. No,
Hmm.
these are well-known European Union nations where the banking system had a crisis, where the actual bank, like in Greece, they froze people's money, anything
Hmm.
over 50,000 euros. I mean, we got messages about that,
Yeah.
So, and it's not 50 years ago. It's not 1929. It's not this happened in 2012, 2013. So there is a reality. Now, if we keep saying, well, I don't think it's going to happen in the US, but we saw a small glimpse of that with one of the banks, right? One of the local banks here in California, when they were going through this. I think you could see, people lined up and trying to get their money out, with ATM. So I'm not saying that every bank's going to fail. I'm not saying you shouldn't keep your money in the bank. I'm not that guy. You know that from the time we've met like 5, 6 years ago.
And I'm
But
the guy who likes to get his free savings out of the bank and only use it for convenience in a checking. I like to have my
exactly.
money
What I'm saying
converted to
is,
metals. But yes.
yeah, if you look at even if you look at the motto of our company,
Hmm.
learn, invest, succeed,
Hmm.
don't don't be afraid to seek out the truth.
Hmm.
Learn about this. Don't make a rosy picture just because it makes you feel good, but lean into what's really the financial situation in our country, right? The financial situations of the bank where you bank at, and then figure out a way how to use that knowledge to succeed. That's why in 2009 we shifted significantly towards alternative assets,
Hmm.
because we believed with the policies under the Obama administration, QE1, QE2, QE3, all this would lead to where we are today,
Right.
where the risk taking and just depending on bailouts, which is what I mean. Think these are banks. I'm talking about banks run by significantly experienced individuals and entities that have been around for a long time, but they took this risk thinking that the Fed's not going to be that aggressive in raising
Hmm.
rates,
Hmm.
right?
And they
They
surprised them.
did that because, again, depending on someone else to bail them out, and they took this risk on your money. That's what they did. They took
Hmm.
our money and they took that risk. So this is why I'm saying if the Fed does not cut rates, yes, do we have a big problem? I mean, can they keep kicking the can down the road and can they keep saying it's unrealized losses, right?
Hmm.
I don't necessarily, so there are two things, right? I believe they will cut rates, but I actually think in order to really fix the problem in our country, they should not cut rates.
Raise rates.
Not,
Exactly.
yeah,
Raise.
not cut rates. There's
I'm
no
not cut
reason to
rates.
do that.
Sorry. Rates
Yeah,
need to go where the market will demand it to go and not be controlled or manipulated by central banks like they are. But they need to be much higher. But
yeah.
if that
But
were to happen with all the debt that we have and the malinvestments, zombie companies, and banks that are really just you know uh, underwater in a lot of ways, just unrealized, it would all break, Mukarram. We can't afford to have the rates where they need to be. Now, bring this back to gold and silver. So they cut rates. What does that signal to people? A recession?
yeah, first I think, and we talked about this, I think, towards the latter part of 2023,
Hmm.
where we talked about the difference of a pivot and an actual cut. So, for example, we had for about 18 months or 16 months, 18 months, we had continuous aggressive rate hikes, right?
Hmm. Hmm.
And then the pause. The pause is not a pivot. The pause is simply them not raising interest rates. And what we said in our shows and in our analysis in different places is we believe that the first time that they actually cut rates,
Hmm.
it'll cause a crash in the stock market. Okay. And I know a lot of people will be like, what? Mukarram, that's great. Well, first of all, the S&P 500 is up 31 times, 31 records this year,
Yeah.
right? It's at 21 times multiple it's trading at this year, which is like crazy. But why am I saying this? Because whenever the Federal Reserve has had an extended period of raising rates,
Hmm.
and then when they pause for more than a few months, they've paused for now more than 6, 7 months.
Right.
When they and then they finally cut rates, it's an admission that our economy is probably going into a recession,
Mm.
right? That's the perception.
Or
Whether
already is in recession.
that's the problem. So now, when that happens, stocks should come down. Now, ultimately, when you cut rates more, like the subsequent rate cuts will lead to the turnaround and the market running up.
Hmm.
But this is why I'm saying if you're an individual who has a significant amount of money in an IRA or a 401k or a previous 401k, and it's in the stock market, it's in mutual funds, it's in ETFs, and if you've been part of this 31 times record this year in the S&P 500, it makes sense to take that money out of the market, right?
Yep.
And then figure a way to put it in a market that has not run yet. Like silver should be much higher than where it is.
Hmm.
Gold should be much higher than where it is.
Hmm.
Because when you cut rates, where do precious metals go? They go higher because it takes more
Yes.
dollars to buy the same quantity of the metal, right? Because that's an important
And
concept.
the opportunity costs in other asset classes are less.
Less, yes. And also, here's what I've been harping all of last year.
Uh-huh.
If gold was audacious enough to be at $2,000, even with the most aggressive rate hike we've had for 16 months,
Right.
then I'm all in that horse. I'm riding that horse all the way because it's now at 2,300 before you cut rates. Oh
Mm.
my goodness. Get
Hmm.
ready. When you cut rates, where would commodities go? That's why I love it. People need to understand that math and the algorithm behind that. And you can use that to your advantage and significantly increase your net worth.
So, what other information is coming out? Are we going to get a jobs report soon?
Yeah, I mean, this week is jam-packed with economic reports and speeches. First, tomorrow, Powell has a speech. Jerome Powell has a speech.
Jerome's talking.
Wednesday, we have the Fed minutes that come out.
Okay.
And then this Friday, you have the non-farm payroll number, because the non-farm payroll number, which is the jobs data, is usually the first Friday of every month, right?
Right.
But here's an interesting thing, and this is what I always teach in my trading classes and my trading coaching,
Mhm.
to pay attention to price action. Today, and especially even last night, I know some viewers don't like Bitcoin, they don't like cryptocurrency, but it is a market that's traded with a significant amount of money across the world.
Mhm.
And what we noticed was early in the morning, like maybe 3 a.m., 4 a.m., we saw the markets turn green, heavy in the cryptocurrency sector. Could somebody know something
about
what
what?
the
The
speech is going to
speech?
be tomorrow? Yeah.
Oh, okay.
Could they know something what the Fed minutes could look like and how that could be interpreted?
Okay.
Because now we're coming closer and closer to which I believe is a opportune time for them to cut rates, and getting ready for that and understanding which markets move, because not a lot of the stocks moved higher, but crypto related stocks moved higher. Crypto miners moved. That means commodity assets could go higher, which
Okay.
gold miners, I believe
So you're
they'll be
saying,
in a
wait. You're saying crypto is like a canary in the coal mine for
No, that's
metals?
not.
No,
No,
you're not saying that, right?
no. The gold is the canary in the mine for the
Yes.
stock market to come down. Because when gold
Ah,
goes up, as stocks go up, that's the canary in the mine. Because gold should not be going up as the stock market goes up, and that's what it's done in the
yes.
last 6 months.
Amazing, isn't it? How about this? This also happened between our last meeting. The petrodollar deal that has been in place for 50 years. It was in the news. Saudi Arabia didn't renew it. Is that a big deal or small deal?
It's a big deal. It's a big deal because if you take all of the things that's happening around in the world right now, with the Israel-Palestine conflict, with the fact that Israel really wants Saudi Arabia to normalize relations with them, and they've tried it many times, and there's been sabotage upon sabotage and different times, with that intentional and not intentional. The other thing with the Russia and the West, I'm not saying any more Russia, Ukraine. I'm saying Russia and the West crisis. Okay, that's what it is. Russia, they have a real significant crisis with the West, especially after Europe just approved using their frozen assets to
Mm.
pay, Ukraine's bills, pretty much, right? So that's a big deal. And Russia keeps threatening that. So when you look at that, and then China, with China's economy being like in shambles over the last 7 or 8 months, and all of that stimulation that they're trying to do there, China's trying to make a lot of inroads with Saudi Arabia. And this is why not signing that petrodollar or moving away from it
Right.
is significant, because now sanctions are not as effective, you know.
Oh, interesting. Yeah.
Geopolitical chess moves are not as effective,
Hmm.
because now you have the biggest producer of oil in the world, where you have 10 or 11 million barrels of oil a day, is going to say, hey, I can settle to you in your own local currency. That's a big deal.
All right. So,
Thoughts?
what? Yeah, I think it's a big deal, and I think even though some people argue that it wasn't a formal agreement and it never really was there in the first place, not written, I believe it was, and I believe there's enough evidence to show that we did have a deal that was brokered first, with Kissinger and Nixon, but has been strengthened. The military and the support that we give Saudi Arabia. I really think this was something that we have been always dealing with up till now. They've played it down. They didn't report it. You never heard anything in the news. I think it's a huge deal. I think it's just another nail in the coffin, along with, the BRICS nations growing.
Also,
But yeah, I
yeah,
think it's big deal for our economy.
just to add to that,
Hmm.
uh, most people are, they know about the Middle East or the oil producing nations pretty much on a third party basis, not even a second party basis. Like usually they know it through media, the news, or documentaries. But just letting you know, being in that region, understanding that region, especially Saudi Arabia.
You
um,
personally?
yeah, me personally, I can say to you, and being like from the region, growing up and understand,
Mm.
like, even with academics and everything over there, what I can say to you is the United States is a very, very special, hallowed relationship between the Saudi Arabia and the United States, especially when King Faisal and everything that happened when, oil was discovered there, the agreements that were made for initially the Aramco. I mean, Aramco is Saudi Arab American oil company, right? So with the history, when you know the history of how important and how hallowed this relationship is, between Saudi Arabia and the United States, to even fathom a day where Saudi Arabia will say we will no longer support a petrodollar is a big deal.
Hmm.
Is a big
Hmm.
deal.
Hmm.
Most people outside the country or outside the region will not understand that. But for us, when I look at it, it's a big deal, because if you grew up there, or if you visited there, if you lived any time there, you'll understand how important that relationship between the US and Saudi Arabia is. And I believe in the last 12 years or so, that relationship has gone down significantly in terms of the respect. And this is why, even from the debate, when Trump
Oh,
came out now,
I was
I don't agree
No,
with
no, no. I was
everything.
going to ask you. You're jumping the gun here. Big deal, little deal. I had a couple things I wanted to run by you, Mukarram. So,
Oh my God.
for before we get, you're reading my mind, man. So, petrodollar, big deal, especially for gold. I think. What
Yeah.
about France's shift to the right? I read actually that this is a 40-year high voter turnout for France, moving to the right. Normally, I don't care much about what France does because I'm an American. France, okay, but this is a big deal, right? Well, what do you think?
Well, this week I'll be going to Europe, and
Mm-hmm.
we even discussed talking about, like, maybe doing a show from there, or having maybe a recorded show from there.
Ooh, that'd be
But
fun.
um, just and I'm going there also to understand, kind of, feet on the ground, what's going on as well, get an idea of it. But
Mm-hmm.
um, here's the thing. Like you said, France, yeah, they're important in a way, right? Don't want
Mm.
to offend anyone watching us today,
You're so
but
diplomatic.
the sh the shift that we're seeing, which is clear now, about 5 years ago, we saw this shift. Okay. We saw this shift, and even just on analysis, we saw this in South America. We saw this in Europe, in
Mm.
Western Europe.
Mm-hmm.
But it was never a realistic probability. The probability was never high. So when we analyze that, we go like, okay, this is happening, but
Mm-hmm.
it has low probabilities. But now seeing this happen, and especially with what's going on in England as well, um, these are realistic scenarios where you can have a far right, government in France. And France is a major nation in the European Union, right, in Western Europe. And then they can influence other countries that are big, that are important when it comes to, and especially in Germany too. There's a lot of noise that's going on there. Now that's the difference here. This is a reality, just like what happened in Argentina,
Mm.
with the president-elect there. It's a
Millet. Yeah.
reality,
Mm-hmm.
and the shift there in terms of what they're doing with the currency and all that.
Interesting.
So this is why I think we need to pay attention to that, because if this was to snowball, we will we will see some major changes, especially in Ukraine, because already the far right in France is saying we're not going to fund them as much,
Mm-hmm.
and we don't want to send any troops to
Mm-hmm.
Ukraine.
Mm-hmm.
This will embolden Putin, right? It can make Russia embolden themselves with North Korea, China. There's a lot of geopolitical stuff going on that you have to kind of take a bird's eye view.
Right.
Gold is the place
Yeah.
to be for that. If that
I know
unravels,
they're all connected here. I mean, that's why we're talking. So we're talking more tonight, I think, about the geopolitical aspects than we normally do. But they're connected, right? So we see
there's a lot going on, Yankee. I mean,
Right.
look at
There's
all you see
so
on the
much.
TV. There's so much going on,
All right,
right?
so I got to ask you this: did you see any reaction of any kind in silver and in gold, in the silver and gold markets, from the fallout of Thursday night's debate?
Thursday night's debate. Oh my God.
Biden. I know, and
What
we
a
don't have to
debate.
talk too much
Was that
about.
even a debate? I don't know. Was it a debate? I don't know.
Okay, all right.
Okay,
You're
all right.
usually very diplomatic here, but
Yeah, no,
this
but
is so hard. But
that's the
yeah.
problem, Yankee. Like, as Americans, as
Oh
people who
man.
love this country, we have to be able to look at something and
Mhm.
say the truth about it.
Go for it, man. I agree with you,
That's the
100%.
problem.
Yep.
I mean, I'm saying, even when you watch that debate, now, do I agree with all the facts Trump spewed out? No. But you can clearly see one person deserving something over another person, right? Now, it doesn't mean, like, I know I'm gonna have a lot of haters telling me stuff. Oh, what it means is this. Here's what I thought. I watched the entire debate, by the way. Usually I don't. This
Oh
time I
wow.
wanted to watch it, okay? And
Yep.
here's the problem with this.
Yep.
I so wanted to say, like, if Trump could have even said this, hey, even if you don't vote for me, like, which is Trump, right? Even if you don't vote for Trump, don't vote for someone who's no longer ready for this job. Because as Americans, we want our country fixed, right? We want our trajectory fixed.
Yep.
If you're going to vote for even if you hate Trump or you hate the Republican strategy or whatever it is, I get it. But you have to require from your party a better candidate. Require a better candidate for the future of this country. That's what I'm saying.
Okay.
That's the first takeaway. The second, I did notice gold and silver pulled back a little bit in the beginning of the debate and the middle portion of the debate. Then after that, I think this is where experience comes in. I remember last time when Trump was running, and not this election prior, but before that, when
First
Trump
time.
became president.
Right.
The run up to the election, gold was consolidating, gold was running up, and then gold pulled back when Trump won at that time.
I remember that.
Yeah, and I was trading this market during that time. And a lot of people ask me, well, why would gold pull back? Because Trump's so supportive. Well, it's because the majority of the country at that time thought, oh, well, we have a leader that can fix our issues, right? But this time around, because we've already known his administration, or we have an understanding of what his administration is, we have an understanding of the Biden administration, I think gold will perform even better under the Trump administration, simply because Trump is is saying that, hey, he's not for regulations as much. He
Mhm.
wants to
Hmm.
open up the regulatory scene, even with the SEC and all of that thing. And I think that's what the markets are waiting for. But don't be surprised if you see a pullback in equities in the beginning, simply because anything that's overheated, when they feel kind of a relief, you'll see a pullback and then a run.
All right, so I think we need to at least get to some charts here. I mean, I don't want to shortchange you, man, but I mean, we had some interesting stuff go on, and you said you had an interesting chart for silver. Is that right?
Yeah, I have to show you this,
Okay.
especially because we talked about kind of some price projections last time.
Right.
I want individuals to understand where we are and what that means. So let me just get that chart going quick. And what's interesting is when I was just getting ready for this meeting today, our show, I pulled up my charts and the blue lines from last time were there,
Oh yeah.
which is great, by the way, because and I'm trying to do a screen share
Yeah.
and I'm not getting why is this happening?
Take your time.
So hold on a bit.
Sure, no problem.
Mm.
Let's see. You do have right
Right
to share
now,
it?
we're having a little technology issue
Oh, okay.
because I'm trying to do a screen share.
I
And
shared
I'm still
something.
on with you on Zoom, right?
Right, you are. I had shared this screen.
Oh, oh no, that's why we need to take that off.
Okay.
Okay,
No, it
there you
should
go.
be back.
Now I can do a screen. There you go. Perfect. Now
Really?
yeah,
Interesting. Okay.
because that affects it because I think you're doing a screen.
Oh, it's my fault as usual.
Yeah.
That's
But guess
fine.
what? Live, we fix things, right? That's what we can do.
All right, let's see
Okay.
this blue. And you may have to zoom in a bit on the blue line. It's a little
Okay,
small. Yeah,
so
circle.
just so that everyone understands
Hmm.
this chart, we can zoom in a little bit over here. There you go. Um, now,
This is a silver chart, weekly, monthly. What are we looking at?
um, you mean in terms of, well, we're looking at a silver daily chart,
A silver
right?
daily. Okay.
And you can see how right here, I had drawn this blue line to show you a channel where the market would come back, then hit it, break it. And this was the breakout point right here, okay? Which was around the 28, 50, 29, $30 mark, right?
What date? When was that? That May?
It was around May,
Yep.
like towards like mid-May,
Okay.
okay? And then let me see if I can get the pointer going on here as well, maybe an arrow marker. Yeah, there you go. So right here, you see this here? This was the breakout,
Okay. Yes.
okay? Now, when you had this big break, now understand this is a daily chart, which means every day. This is every day. This is how much silver moved. It went from 28 and a half to almost 32 and a half, 33, a little over 33 in 1, 2, 3, 4 days, right?
That's how it
That's a
can
big
move.
move.
Yeah, that's silver sometimes.
Now, sometimes what you'll see is you'll see the market kind of consolidate over
Mhm.
here and then break out again at this point right here. You see that on the top. But what you saw here was a classic. Let me see if I can just do a little brush right there. Yeah, there you go. You see this? This was a classic touch of the
Ooh.
breakout point.
Did it
It
touch
came
that
back
blue
right to
line?
the blue line. You see that? Beautiful. Yeah.
Oh
And
my
if you can see, it
word.
came back all the way and touched it one time right here, then went back up, then came back, tested it. It might even come back and test it again one more time. That's what we call a triple bottom, and then go and break this high. Okay. This is why now I didn't draw this blue line today. This blue line
No,
was
I
drawn
remember the
last
blue
session.
line. Right.
And that's because that's what we expected the market to pull back to before it goes and takes out the more recent high of $33 and change. And this is usually, it's what's called an echo pattern in the market because it's like an echo. It comes back, goes to that area that it broke out, and then has a new. This is why it's not concerning. It's not a panic mode. It's not shorting the market, none of that, right? You're not thinking of shorting, but massive shorts are coming in. It's just a normal correction to that point.
Right.
And then That's what we believe. So I wanted people to see that.
Yeah.
I'm going to go back to the share so that we can maybe change this into a weekly chart and people can see that more clearly. And let's do this. Let's go back. You're still with me, right? You
I
can see
am.
the
Yes.
perfect. There you go. So this is a weekly chart. Now, I want everyone to
Oh, look
understand
at that.
this because you had a range, a big channel right here. That's why you have the two blue lines
That
now. You
was
see
all.
that big
That was
channel?
all spring. Yeah, I
Yep, that
remember
was
that.
all spring, yeah,
Yeah.
from the beginning of the year and even before that, right? Massive energy base. This is a massive energy base, guys. This is why you should not short this market. Whoever wants to short this market, they have a
J.P. Morgan.
significant amount of capital that they want to lose. Okay, let's just put it that way. Because this kind of an energy base, you see this entire movement, this is just the coiling of the spring, and then you had this run here. Now, instead of coming back down here, guess what? It continued this way. See? Broke, came back, broke higher. Classic pattern of a market that is saying, I'm done with this consolidation. Now, what's interesting is this consolidation has lasted all of 2023.
Three. Yeah.
Because this is 2023 down here, you know? So this is an entire year's worth of consolidation, and this is what we call an energy base. And that energy is what caused it to go from 23 to 33. That's a $10 movement, okay?
Right.
Just to put that in perspective, that's almost like a 50% movement,
So, what
right?
makes you think that we won't get to another one of those cycles for a year where we're going up to 33 and back down to 29 and up to 33 and back down to 20 and up to 34 and back down to 29 for a year?
Because of two things.
Why?
One, when you have a consolidation that's that long, you now had a breakout. So breakouts don't lead to another 1 year consolidations because a trend has been established. So this is one of the things I teach people in my trading coaching programs. Why do prices go up or prices come down in a particular asset class? Because there's more buying than selling,
Mm-hmm.
or there's more selling than buying. A price of an asset goes up because there's more buying than selling. Whatever it is, whether you're looking at a 5 minute chart, a 1 day chart, a 1 month chart, a year chart, if the price is, in a 5 minute chart, if it's over, the previous 5 minute time period, that means there's been more buying in the last 5 minutes. If you now look at it in the day chart or a weekly time frame or a monthly time frame, if the price is higher than last year's price, it's because there's been more buying accumulated, or that is higher than the selling. So at one time, when you consolidate for a year and then you have a breakout, you don't have a lot of people who want to sell that market. You have more people who want to
Oh,
buy it.
okay. I got you.
That's why you don't have extended consolidative phases after you break
After.
out after a year-long consolidation, because all of money making or investing and trading is about risk management, right? So if you go to this chart and then you say, you know what, I think I want to short this, it's a very bad risk management on your end, because now after a year's worth of energy and consolidation, you've broken out. You do not want to be shorting that market.
Great.
Any pullbacks will just be buying opportunities.
Mm.
Sometimes here's the issue: people don't have patience, right? So they want to see, as soon as silver broke through 33, broke through 32, they think, okay,
40, 50, 60,
down.
that's it, right?
Yeah, I want to go 35 and 40,
Yeah.
50. No, it doesn't need to do that, because silver and gold are not assets like that. They're not Bitcoin, they're not cryptocurrency, they're not crazy stuff that go $5,000-$6,000 a day. This will follow its trajectory, its normal pattern of behavior, and that's what it's doing. So I wanted people to see that. The other thing I want you to take from this is, if we can switch this simply to a gold chart quick.
All right, we can do that. We're going to be leaving markets and macro soon. I do want to spend just a few minutes on retirement. I have a question that I want to ask you around that, and then we're going to get to the Q&A section real soon. I promise, guys. So hang in there.
Yeah. So
right,
this
go
is
ahead.
gold. Now look what gold's doing. After it has come to 2,300, almost 2,400, gold is consolidating over 2,000. That's the thing. That's why the 2,280 level is very important short term. If it does break that, we could probably see 2,200 or so.
So are we at the same type of coiling up for a whole year and breaking out
No,
model of silver.
no,
This is different, is it? It looks different.
this is very different. Yeah, you
Okay.
can see the
Yep.
chart. The chart looks very different. It's a chart that says, hey, I can go 5 steps up, come 2 steps down, and then go 5 steps up like that,
Yep.
So now you're consolidating. Why is this consolidation a little longer than before? Because 2000 was a very difficult psychological number to stay over, right?
Mm-hmm.
Now, since you've gone over that, so the best way to look at it is on a weekly chart. You can see that. Every time you came to 2000, it took a while to break it. Now,
Right.
since you've gone over it, it's just going to consolidate, get rid of that energy. It's like a monster that came out to eat, got really full, goes back, waits for a while, digests, and then comes back, right? So
Mm-hmm.
it's like all of trading is kind of understanding that speculative psychology. Because why do markets move? One, I said, because there's more buying than selling. That's why
Mm-hmm.
price goes up. There's more selling than buying. That's why price comes down. The other thing is it's always fear and greed. How do you trade the fear and greed, right? And that's the important thing.
Well, you're the expert on that one. I'm a stacker. I like to buy and hold forever. But if you're interested in making money, Mukarram is a great resource, especially for those who are retiring or nearing retirement. So I wanted to ask you about this. We're shifting into a retirement insights here. Um, what have you with silver? So we're going to look at two different metals here. I'm trying to get a pulse and insight into what you tell your clients when something like this happens. So let's say you've got a new person coming on board saying, "Listen, Mukarram, I've got 300,000 in my IRA. I'm scared. I don't like what I'm seeing in the market. Even it's going up. I think something big's going to happen. Something big's going to happen soon. Maybe with this election." The banks that we talked about earlier, interest rates, whatever. I want to move some of that out. Do you immediately buy in on silver and gold, or do you look at these charts and say, we're going to move it in, but it looks to me like it's pulling back. We want to wait and then buy your silver eagles or whatever it is in your, IRA, metals IRA, or do you just do it immediately? Do you, in other words, do you bring your technical expertise into helping a client who just wants to start hedging and bring more gold and silver into their IRAs?
Yeah, I mean, great question. There's a few different approaches because nothing's chiseled in stone. Okay,
Mm-hmm.
because here's the first layer of understanding that it's never about you, it's always about the markets. Because the markets will always be right.
Mm-hmm.
It's not whether you're right or wrong, or the client's right or wrong. The markets will always be right. So your job is to patiently listen to the market, what it's trying to communicate to you, and then take the position or the position building based on what the market is telling you to do, not because of what you think. I mean, obviously you can have a
Right.
portion of
I guess that's
have
nice.
connection to the market.
That's a good way. Other than I said it the bad way, you're saying it in a great way. Do you listen to the market with your new clients when they
Yeah,
want to
that's
move it?
why I think when I
How
said
do you
there's a
do
few
that?
different
Yeah.
ways to approach that.
Right.
One, if you're in a consolidative phase in a market, like we saw in silver, like a
Right.
year-long consolidation,
Yep.
we can always say, hey, we now know kind of the channel, like support and resistance levels. So money comes in all the time, right? For us, like IRA money is coming
Mm-hmm.
in. We don't have to buy it as soon as the money hits. We're not like one of those firms, right? Where we say, okay, we're going to buy it today,
Right.
immediately.
Right. Right.
All they're considered about is their exorbitant fees and spreads. And we're not, we're thinking long term. How do we build a massive net worth and a massive account for our clients, especially if they're coming in with larger amounts?
Mm-hmm.
How do we build it over the next 3 or 4 years or
Mm-hmm.
5 years to something significant that can change their lives?
Mm.
So we are okay with saying, hey, right now, we may think there's a little bit of a correction left. We have math models that show us, and then we'll purchase it after that correction.
I
Now,
see.
here's the thing. Does that always happen? No, because the markets might break out, like you saw in silver,
Mm-hmm.
right? And then you have to adjust your thinking and go, okay, if I don't buy it today, it could be up another 5% tomorrow. Now, if you're talking about $1 million account or a $2 million account,
Mm.
that's a lot that they're paying up, right?
Mm-hmm.
In order to break even. So here's how we do that. What we need to do there at that time is, what do we think is a corrective sequence inside of the breakout? And then communicate very clearly to the client, hey, we are buying into this market. understand that if there's a pullback, there's nothing wrong in it. It's just that you have to understand that you're in this to see silver at the 40s and 50s. It's okay if you bought it a little bit higher before the drop, because you're not watching this market every day. That's not why you're buying physical metals,
That's
right?
true.
You're not
Yeah.
buying to make 20 grand next week and get out of your metals. No, it's okay, but you have to adjust your strategy, because you can't sit there and think, you know what, I think it's going to take another $3 correction, so then I'm going to go buy it. Because what if it never comes? So that's why I have a kind of an approach when it comes to trading or investing, is I always figure out in my model, what can I do that if I execute it, that I won't regret it. That's all it is.
Yep.
If I'll execute it in a planned way, that even if there's something that happens that I don't plan for in the near term, I'm still okay with that decision because my fundamentals are correct.
Well, that's
So just to answer your
yeah.
question, yes, we wait for levels.
Yes.
We do look at math models, but when the markets get really heavy in the volatility, you have to also have the experience on how to ride that horse to the victory, to victory.
I asked that question because I don't think I've ever asked it to you specifically like that. I wanted to get that answer, not just for me, but for those listening as well, because I've heard back from many people that you've helped, and you've helped dozens and dozens of people in this community, in the stacking community, really protect their portfolios. So you do a great job with that. And sometimes they tell me that. They say, yeah, Mukarram and I were discussing when to pull the trigger on this. And I was like, how does that work? That's pretty cool. I love that. But I had not known exactly the way you approach it. So
and there's more
you bring
to
your
it.
trade. Yeah, there's probably a lot more that I'm missing here, but yeah.
But yes, we do that
That's
because
awesome.
because our goal is to increase the value of this account over time based on the asset you have. Now, we also do crypto IRAs. We do all that, right? That appreciation is different to a metals IRA. So you can't compare the two. And then that trading is very different to when you would buy. Sometimes I would do a trade at 2 a.m. in the morning or 3 a.m. in the morning, where metals is not like that,
Now you're seeing a lot of people still concerned about their assets, even though the market seems to think everything is wonderful, right? We've talked about the stock market at length in prior, mastering metals, so we don't have to go into it now. But you still see a lot of clients or people talking to you saying, "I'm not happy. I'm not satisfied, even with the market going up, leaving my money in there."
That's where you should be the most cautious, because this is a market that is completely overbought. And anyone who, I'll give you an example. I deal with a lot of clients who have NVIDIA stock. NVIDIA that has gone crazy,
ballistic,
right?
yeah.
Through a split. Some of them have made millions of dollars with just one stock. Now, you will be surprised how difficult it is to convince them to take a portion of that profit and move it, because they're so caught up in thinking that it's going to go to $2,000. It's going to go to $3,000.
That's my point. I was trying to say that once it starts to go, you just don't want to get out.
Yeah,
So you have to convince some people, no, now's the time to
I have to show them math.
Okay.
Because if they're serious, because there's some people who say, hey, I want to protect my money. I want to increase my net worth. I don't want to be caught up in a 50-60% movement down in the market. But then when it comes to making that decision, they're scared, or they're fearful, or they feel like, I don't know if that's the right thing, simply because the market was up that day. You're not doing this because you want to make money tomorrow, or you might lose a little money tomorrow if you get out of the market. You're doing this. This is what I want everyone to understand. If you're in the stock market and you've had maybe one real small correction, in 14 years or so, what you're doing is you're preserving your money, and you're taking your money out at possibly the top end of this market, and you're moving it into another market that has a significant potential. Silver's been to 49.5 in 2011, right? April 2011. Silver spot is at 29 now. Come on, guys. Why does that scare you? That's why.
Interesting. All right. So we're going to see a lot of people rush after silver when it starts to take off, because it's the FOMO. People are going to come in. Now, though, is the time to be stacking silver, not waiting until it does hit 30 and then it goes to 40 and then it goes to 50. It's too it's too late at some level. It's never too late to buy silver, but you're missing out when you really do wait for the hot hand and you just wait and you rush after it once it goes up. Now, I'm probably preaching to the choir here. Those listening right now, they're probably already fully stacking and believe it. But this is something that you provide a lot of people, the counsel and the help to determine what percentage makes sense of their portfolio, when to do it, and how to do it. So, if you're interested, if you've got an IRA or a 401k or a past 401k, Mukarram, they should reach out to you, shouldn't they?
Yeah, and you should know that not only will we take the time to teach you what this is about and how we approach this, because that's why we say learn, invest, succeed. That's the motto of our company. But you also understand that we can do this for you. I think some people think they reach out to me, they get the information, but they don't know that we can do this for you. Like we'll help you set up a self-directed IRA with one of our custodians or two custodians, the largest custodians in the country that have self-directed IRAs. Then we'll help you get the right kind of metals and the right composition of metals, so you don't end up paying exorbitant spreads, buying collectible coins or buying, premium coins that don't make any sense. Because of our experience, we'll put that together and we'll help you get the right mix of coins that we believe can get the best performance as this bull market continues and breaks out. So we do both sides. We educate you and we'll also help you get out of your existing IRA and then transfer that over into a self-directed IRA and then purchase metals for you and then get that put into a depository. And the same thing with the previous 401k, because a previous 401k pretty much acts like an IRA. You have no penalties, no taxes. You can move it at any time. And also for individuals who are 59 and a half and older, you can move your money from your existing existing 401k because it's called an in-service rollover. Do not let anyone say, oh, you're not retired yet, you haven't left that
Yeah.
company, so you can't move the money. When you turn 59 and a half, you can move money from your existing 401k from your company without leaving that job with no
Wow.
taxes, no penalties. It's called an in-service
A
rollover.
lot
And
of people don't know that an in-service
yeah,
rollover. That's very important. Really quick question for me before we get into the Q&A, and I've told people to put their questions in uppercase, all caps, right in the chat. We'll get to it in just 30 seconds if you answer this quickly. Have you had people come to you, new clients or prospective clients, that have gone down the route of a gold IRA with some shyster, some horrible outfit that tried to scam them, and they've bought up collectible high premium gold coins, and they maybe had the scare tactic given to them that confiscation would come unless you buy this and you could lose everything. Do you have clients that come to you that have already been down
many,
that route?
many clients, and not just gone down that road. We've had clients. I mean, I don't even, because I've been doing this for 15 plus years, right?
Mm-hmm.
So we have so many examples, but even just very recent examples, just from the show, Yankee, that we've helped clients,
Yep.
where someone reached out to us and said, hey, and in the beginning, they didn't want to reveal that they had done that, right? But they were
Oh,
just
yeah.
doing an
Who
information
does,
discovery.
right?
But then later, when they knew that we can help them,
Mm-hmm.
they said that they had already done that transaction and they didn't know, because they don't tell them this is what happens and this is how much the spread is or anything like that, right?
Mm-hmm.
And then we were actually able to help them, you know, change that, because there's a way to get out of
Get
that.
out of it?
Yeah, and then,
Oh,
sometimes it's a
wow.
little too late, and then you
Yeah,
have to
yeah.
figure a way to sell out of that metal and then help them.
Uh,
But if you're in
at a
maybe about
loss.
3/4 into that process, you
Mm-hmm.
can do that. We've had clients actually call us and say, hey, Mukarram, I want to stop this because I just learned now, since I'm buying the metal, that
Oh,
I'm paying 20, 30, 40% in premium. I don't know how that's even possible.
wow.
And then it's all because, all the reasons you mentioned,
Yep.
right? Which is
Yep.
unscrupulous kind of companies. But we were able to help clients like that. And a recent example from your channel, we helped them, and not only did we help them, we helped his wife,
Mm,
and then after that, they are now in profit in the
good.
metals that they
Good.
purchased
All right.
because
Let,
it's just the correct way.
all right. So we're ready to talk to some stackers here. we got some.
Yeah, I
We
am
got some
definitely.
great stackers. All right, so we question here. MJ Bo 183. Is palladium a good buy now? We always get the
Um,
platinum and palladium questions in this in Mastery Metals, don't we?
Yeah, I mean, we do, and I think it's a good question.
Yep.
Here's what you have to understand. I think because you know how we like to give answers in a way that everyone can learn from them, right? Because of the macro climate that we're in and the interest rate climate that we think that we're going into, all commodities are going to be great, okay? As long as they're industrial, as long as they have use cases and they have
Mm-hmm.
a safe haven appeal, all commodities will be great. What I don't like about platinum and palladium,
Mm-hmm.
I'm not saying they won't go up, but why I choose gold and silver over platinum and palladium is because platinum and palladium are strictly industrial metals. And if you cut interest rates, and if on the
Mm-hmm.
first or second cut, or between the first and the second cut, the market comes down significantly, like the stock market comes down significantly, platinum and palladium prices will be affected. That does not mean they can't turn around and go higher later, but I would prefer gold and silver versus platinum and palladium.
Good. All right. Mark Briggs, please explain the paper to silver ratio, 400 to 1, and how it's even legal, literally trading pixie dust. I love
People,
it. It's
sure.
400 and I'm trying to bring up, let me see if I can bring up the US debt clock here. Let me refresh. Because they're showing old Fed money and new USA money. I haven't actually seen this. They always put some fun stuff up here, but over here, paper to silver ratio now is 401.06 to 1. The paper contracts, Mukarram.
Okay, I get
You
what you're
see
coming
what
from.
I'm saying here?
Yeah, yeah,
This is a real, this is the hypothecation. This is the manipulation. This is the way they can trade the single ounce of silver over and over and over and over and over and over again. And everybody thinks they have a
yeah.
claim on it. It's
Look at a futures
never,
contract,
you know what
like
I'm talking
5,000
about.
ounces of
Yeah.
silver,
What?
I mean, look at a futures contract in silver. It has 5,000 ounces of silver. For every dollar it moves, you make 5 grand or you lose 5 grand if it
Right.
moves against you. But that's why physical metals are very different to paper metals or paper instruments because
So
even when
huge.
people say, if people, from this show call me and sometimes say, hey, what if I buy SLV or what if I buy an ETF?
Oh, they
Is it the
do?
same thing? It's
What, from
not.
my show, they say that?
Sometimes, yeah,
Oh,
they say
come on.
yeah, I mean,
Man, I am failing somewhere here. You
sometimes it's
gotta
not
hold
the
it.
same thing, guys. Buying a silver ETF is not the same thing as
Yes.
buying physical silver, like
Mm.
silver eagles or silver
Hmm.
kangaroos, and having them in an IRA and then owning them fully paid and no leverage and having that run up as the market goes up. God willing.
Yes. It's a scam and it's going to break at some point. You can't keep doing this without a reckoning, a day of reckoning. So that's why you got to have the physical, and yes, preferably in your own hands, physically in your own safe, on your own property or in someone's property that you trust. However, with an IRA, if you already have money in an IRA, you already have it out of your hands, and it's probably thin air. So at the very least, I advocate moving some of that into precious metals, even if it's vaulted somewhere else, hopefully in a trusted area for a period of time. I'll tell you, Mukarram, when I turn 59 and a half, and I'm getting there really soon, I'm going to want that shipped to my vault, right? I want it put in my safe. But
Yeah,
not
I mean,
everybody, I want to save on the fees. I want to be able to, but to put some of it into that now makes sense because if it evaporates, you're not going to be able to have that shipped to you, that your stock. It's not going to come.
yeah,
So,
and
yeah,
also you can always like have physical metals in an IRA at a depository,
you
and at
can.
any time decide to take a distribution.
Yes.
It's called an asset in kind distribution, and ask for the actual metals to be shipped
Sure.
to your house. We can
Right.
do that for you. Someone asked the question, what's the best company to move a 401k to gold retirement?
Mm.
That's why we're here. Call us.
Mm-hmm.
We can help you with that. If you have an old 401k or a previous or a current 401k and you're older than 59 and a half, we can help you with that because we'll give you the best way on how to enter these metals and then build a position that can appreciate over time.
Oh seven Black Dog says minimum rollover target. So, do
Minimum.
you have like a minimum that you what I think he's asking, do you have a minimum rollover target?
No, I think the minimum
I
is based on
think.
your goals, right? So always just reach out to us.
Yep.
Obviously, and I'll make a distinction here.
Mm.
When you call me, and if you have 500,000 in the IRA, and then you say you want to only move $10,000, that means your goals are whacked. Okay. Nothing makes sense because you're not doing this for the right reasons. You just want to move some money to have some metals. Okay. But you're not accomplishing anything with that
Mm-hmm,
because you're
mm-hmm.
leaving 95, 98% of your money there and it'll move against you and your metals can't hedge you with it.
Right,
Right.
right.
So the minimum, that's why I don't have a minimum. The minimum depends on your goals
Mm-hmm.
and what money you have to move around and protect and grow.
OC Stacker's turning 60 in December. Good for you, buddy. Better you than me. No, no. He said, can we also roll over in service out of an IRA or a Roth IRA? You remember you
Yes.
mentioned, yeah,
I
it's a
mean, it's
retirement
not an
account.
well, it's not an in-service rollover anymore.
Yep.
But if you have an IRA, a traditional IRA, or
Mm-hmm.
if you have a Roth IRA that has stocks and mutual funds in there,
Mm-hmm.
understand you can sell out of that, go into cash. We can help you with all this with our team and paperwork and all that. Then we move that into a self-directed IRA, and inside of that self-directed IRA, you will buy treasure, physical gold and physical silver, and then have that in the form of a Roth IRA
Mm-hmm.
or a traditional IRA and have it stored at a depository like the Delaware depository.
Watch me. Hello, I'm 27. How much of my net worth should be invested in gold and silver?
It's nice that you're watching the show if you're 27.
Isn't that
That's really
awesome?
great because it gives you a leg up in
Way to
everything
go,
that you
watch
do.
me.
Yeah, but without knowing what your financial situation is and what your goals are, it's hard to answer that question.
I always struggle with this because there's
Yeah.
so many variables. I mean, I can give them a rule of thumb. I can tell them what I did, but it depends on so much: their income, their debt, what their, like you said, what their goals and risk tolerance are. I mean, watch me. I have a membership program where I'll actually sit down one on one with people and talk about other, financial, coaching, even down to a budget. So if you're interested, let me know and email me. I can link up with you. Cindy says, "What's the hottest selling silver right now?" Well, I
I
told you
think
you're going to talk to stackers right now.
I think we should look at what's the silver that can give you the best growth over
Right.
time. As
You're
the
going to look
market.
at it. You're looking at it from a trading perspective. I'm going to look at it from a stacking perspective. So
Yeah,
you,
yeah.
you
So
go
you can
ahead. You
answer
you
that.
tell them.
Yeah,
Yeah.
for me, anytime the market pulls back
Mm-hmm.
or premiums cool, I would prefer Eagles.
Mm-hmm.
But when the premiums get inflated in the
Mm.
Eagles, then I would prefer another coin that we believe proprietary, like looking at the mix. And now remember, that doesn't mean a premium coin or collective. It just means knowing whether it's a Britannia or a Kangaroo or one of the bullion coins that can perform better, and then taking advantage of that arbitrage, right? Like between the Eagle spread and then the spread of the other
All right.
coins.
Let me tell you mine. All right. So again, these are different goals, different perspectives here. So if you're talking about an IRA, if you're talking about putting it away to build wealth, and you're talking to Mukarram, you're going to be focusing a lot on sovereign silver and gold, right? Mukarram,
Yes.
right? If you're stacking and you want it in your hand right now, I think the rounds are awesome. All right, you might not want to put this in an IRA, but you definitely want to have silver and gold rounds and bars as well as some of the sovereign silver. Those are some of my targets. If you're going to get sovereign silver, I really do like the maples. They're the lower premiums. So I don't know. Do you have them get maples in your IRAs, or do you stick with
Not
the?
our first choice, right?
Okay, all right.
We'll watch depending on the markets and how the spreads change. But we definitely would want,
Hmm.
you know,
These eagles.
Eagles are the
I
best.
got it. I got it. Let's see. More questions. Looking through here. Put them in all caps if you have a question for one of us. Okay. They're going to ask you this. How long before silver hits $35? Question mark, question mark, question mark, question mark, question.
I
Best
think we're in a
prediction.
very good place, silver and gold right now.
Hmm.
Um, Instead of thinking of that
Hmm.
as your main question, you should think about how long do you have these prices that you can take advantage of. right?
Mm-hmm.
Because you won't see this for too long once the trend starts going the way it was. And if you have some kind of an announcement of interest rates being cut.
That's the big key, isn't it? Because we're so addicted to cheap money. We really are. The markets are, banks, everyone. Treasuries are, and the geopolitical tensions. We do not know in a. I'm going to tell you this too. We look so weak on a global stage right now with what happened Thursday night. It's just another way that our adversaries, those who want harm, can be emboldened. We got a weak president. He can't handle it. So maybe they do something, God forbid, between now and the election. You need to be prepared for any and all circumstances that could really rock the price of metals. So I again continue on a stacking level, continue to buy dollar cost average, keep stacking on a retirement or investment standpoint. Talk to Mukarram, he'll help you with that. All
Yeah,
right.
I
So
can
how
just
long?
make it very simple. Like, think
Yeah.
about it. It's 4 or 5 months ago, everyone was talking about why silver is closer to its 20 than 30, right?
Right.
And now silver's almost at 30 or close to the high end of 20. That's what you should be focusing about. That's a 50% move. And you don't want to keep saying, "Oh, I think it's going to come down."
No.
Think about what you
Expectation.
were
But you
talking
know why though,
about
Mukarram?
5 months.
Everyone has these expectations. We should be triple digit silver. Silver to the
No.
moon. But
Oh,
there's a lot of
yeah.
stackers that have that
But if
expectation.
you bought, like, let's say, very good question. Yeah, I really want to address this. Okay, silver can go wherever it wants, and there's a lot of articles out there, right? Triple digit
Yeah.
silver, why it should get there. But think about this, okay? Think about this. If you have two, $300,000 in an IRA, or 500,000, or 600, whatever number that you have in the stock market right now, if you bought enough silver and gold by moving that money over when silver is in the low 30s, okay? Because with the premium, you're buying it somewhere in the low 30s, right? Do you understand that you don't need it to go to triple digits for you to double or triple your money? This is what you have to understand. Like, you got to approach this in a way that it's about growing your money and not about being right. Okay? That's a very important philosophy
Oh,
if
but
you
we want to
want to.
be right.
You want to be right. Yes, we want to be right.
Oh, it's a
Well,
good
good
point.
luck.
No, it's a good lesson. Jerry, let's just move on because we're running out of time. I want to get a few more questions in. So pull all my stock and sell them? Jerry wants to know, liquidate all stocks?
Jerry wants to get us in a lot of trouble
I know he
today.
does, doesn't he? Yeah, I wouldn't say that.
No, we're not
Again,
saying that.
yeah.
What I'm saying is sometimes for certain individuals, that'll make sense
Mm.
because you might be at a certain age.
Yep.
You don't want to see a 30-40% drop in your portfolio.
Yep.
So
Your
it makes
risk
sense.
tolerance has dropped
So
dramatically, right?
the best thing to
Yeah.
do is
Yeah.
reach out to me.
Yeah.
You have my executive assistant's number, you have my direct number, you have an email.
Well,
Yankee.
Cindy's asking, no, Cindy's asking, what is your company contact info?
I'll give it to you right now. You can call me
Okay.
at 949-200-7047. 949-200-7047. If not, I'm sure one of the moderators or
Yep.
Yankee will have all
Yep.
of our numbers, my executive assistant's direct number. She can, schedule an appointment where I can talk to you and explain. That's the best way to do this, where you reach out to me, and if you feel like you're serious about your goals, and you are serious when you say you want to protect your money, you don't want to lose 30-40% of your money, you are okay with, taking the normal cycle in gold and silver and appreciating your net worth, call me. I'll show you how to do it.
Juan Justo, I don't know if he just joined here because we did go over some price information here, but he said, is gold a good buy at the current price without considering silver or other metals? So,
Gold,
yeah.
well, it's a good question, but it's also something we don't want to complicate. Now, we do believe that since gold has taken a little bit of a correction, there might be a little bit more left, right? But this is what goes back to that question you asked me, Mukarram. How do you manage, like, when do you buy and how do you hold something and then wait for? It's because once you've had a breakout, we don't want to wait too long because suddenly you wake up and gold could be up $60, $70, right? Or $30, $40. But what I would suggest is understanding the pure fact that gold is comfortable over 2000. Now at 2300, just immediately tells me it's a great buy. Okay. But can gold come down to maybe 2200, 2220, 2280? Yes, all that's possible. But what does it matter to you, because you're not watching it every day? You're not trying to make, you're not a day trader with physical gold. You're building a position wanting gold to maybe go to 2700 or $3000, which is I mean, it's highly probable once you have all the fundamentals kick in.
I am going to ask a question. We're going to do a Q&A. I'm sorry, not a Q&A, a poll. For some reason, the Q&A doesn't work. But I'm going to do a poll, guys. This is something Mukarram and I have been chatting about. It is up there right now at the very top. Would you find a real estate investing discussion with Yankee Mukarram interesting? That's a lousy. I didn't phrase that correctly, guys. My English was really bad there. It should have said, "Would you find a real estate investing discussion with Yankee Mukarram interesting?" Okay, would it interest you? Yes or no? Because Mukarram does all kinds of commodities trading. I am into real estate primarily as a wealth building asset. Another commodity, another tangible commodity, shelter property. Been doing it since 2008. And I'd be interested to know if you guys would be interested in that discussion in the future, a separate stream.
Yeah, it'll be fun.
Yeah.
It'll be good.
All right. So we've got a few more super chats popped in here. PMG Poor Man Gold Silver Stacks. $2 super chat. Thank you. Here to support each other. Awesome. I love that. Thank you so much. I'll hit the like button on that. And Tiger's popping in with a $5 super chat. It's a question right for you. You can see it.
I know Tiger Stacker.
You know Tiger. You know Tiger. He's
a
you know
very
him.
talented guy.
Yes.
He's great. But Tiger, I'm going to tell you, I'm not going to take this question because it's not something I trade. It's not something I would recommend to you.
Okay.
But I love your intelligence because that's why you're so fun to work with.
Yep.
But I won't even, you know me, if I don't know something enough to invest myself, I don't want to give an opinion on that.
I understand.
And that's what is with Usman.
3D Woodworks. I'll answer this one. I trade on Webull. Why are most of the gold and silver junior miners blocked by trading? So Webull, Robinhood, they don't let you invest on over-the-counter stocks, penny stocks. You need to get like a Schwab account, free Schwab account, or a Fidelity account, or one of those that allows you to get into those over-the-counter stocks. All right. At what point should you stop stacking silver and start stacking gold? Asks Mike Clark. Can I give you my quick stack?
Yes, sure.
Then I want my stacking perspective on that. In fact, I actually came up with a video that broke down, what budget should you, buy silver and gold, and it depends on where you're at, right? So, let's say you had $50,000 to $100,000 to invest. I would say about 60%. 40%, 60% gold, 40% silver. If it was like 25,000 to 50,000, maybe 50-50. If you only had $1,000 or less than 1,000, forget the gold, stick with the silver, 100% silver. So those are the types of things. I dropped the whole video on this. I broke it down. That's my perspective on physical silver and gold. There's a percentage. If you have a budget of such and such amount, you really should be focused on a certain percentage of silver and gold. And that's my opinion. Now, when it comes to trading it or putting it in your retirement account, what do you think, Mukarram?
First, you have to understand, especially even as and I don't know, you can correct me if I'm wrong, but putting physical gold and physical silver, especially the sovereign coins like what we do, gold eagles, Britannias, kangaroos, not the premium stuff. If you put that in an IRA, I consider that as stacking.
I know you do.
I consider that as stacking.
And that's fine.
Because it's your way. Stacking
It's physical metals. It's not paper metals. That's right.
Physical metals.
That's important.
By converting your paper dollars. And if you're keeping it inside your IRA, to me, it's retirement stacking. That's what it is.
There it is. Retirement account stacking. Okay.
So now, after that, here's how I look at this. Everyone should know, after the most recent breakout, after a massive consolidation session or phase last year,
Hmm.
we're in a bull market in both gold and silver. Okay. This is why today you're arguing about whether it's going to be 28 or 29 instead of saying 22 or 23 for silver, and gold is going to be at 2200 or 2300 instead of saying 1900 or 1600. Okay. Because it's had a breakout, it has a breakout, and it's in a bull market. Now, if you come in during this time, it's not too late, guys. This is still early. If you come in during this time, depending on the amount of money you have in your IRA or previous 401k or in-service rollover amount, that will determine how much silver you should have and how much gold you should have. Because now you have to figure out how you want to grow your money in the next 2 or 3 years, because that's kind of the gold and silver cycle. Okay. Now, I want to take it one step further. Do you always stack gold and silver? No. And I know, Yankee, you might not agree with this. It's because once we get to the peak of this cycle,
Right.
there's no reason to buy more gold and silver.
Oh, spoken
I
like
saw
a
another
true
question.
trader. Spoken
Yeah.
like a true trader. You're
Because
making money, baby. You're trying to turn a profit. I get it. I'm
well,
stacking differently, right? I'm a
yeah,
purple
you
stacker.
stack differently. And I saw another question
Yep.
before from a 28-year-old
Right.
who said, I'm 28 years old, I have no debt, and I just glanced at it. I
Okay.
have 5 ounces of gold and maybe 200 or 500 ounces of silver. And he goes, when should I stop? Don't stop. You're 28 years old. You don't need to
Right.
stop stacking gold and silver because you're already doing it with a certain percentage of your money. You're smart enough to do it, right? You're not putting all your money. But if you get older and you haven't done it, you should put it with a large amount of money. Now, here's the thing. When it gets to the peak of this cycle, temporarily, I would stop stacking. I would get out of the market and take that profit, especially inside IRAs. You don't get taxed. So use it, get out of the market, book those profits, because
Right. I get
if you
it.
don't take your profits,
Yep.
somebody else is going to take your profits.
Yep. Let me
Temporarily wait for a pullback and then buy
All
more.
right.
Now, I know it
let me
doesn't
give you my
align.
stacking. Let me give it really in a nutshell. I have a video out as to when I would stop stacking physical metals. About 10 things need to change fundamentally in this country for me to have confidence in a real economy and a real currency backed by something tangible. And until and unless that happens, which it's not going to, I'm going to keep stacking physical gold and silver as a protection, as a hedge, as
Completely agree
wealth
with you.
insurance. Anyway,
When you do it on a personal way, I
yes,
completely agree with you.
you understand
But
that,
when you're
right?
trying to grow a portfolio,
I
you
understand
don't
that
want your
too.
clients 500,000 go to 800,000. And then just because you love stacking, you don't get out.
Oh
and then
no, I get it.
comes
You're
back
you're
out.
talking a whole different, and it's great. And it leads me to stacking inspectors question. I've answered this so many times, and I'm going to do it again. What is the benefit of an IRA? Why not stack physical at home? Stacking inspector, they are not mutually exclusive. Okay, I'm a stacker. I want it at home. I get that. However, if you already have an IRA or 401k already you're taking advantage of your employer's 401k plan and their match. If you already put money into it, you need to protect yourself with physical gold and silver. If you haven't started an IRA, if you haven't started a 401k, I'm not going to tell you to do that. If your confidence level is low in the economy and the state of our government and where we are going, and you're protecting yourself with physical gold and silver, you better buy it and hold it yourself. I'm talking to those who already have a retirement account, which is largely thin air and is already outside of your control, and you can't physically have that either. How do you protect yourself? How do you hedge? And how do you, as Mukarram loves to say, take advantage of incredibly low prices in commodities and make money in your retirement, for your retirement? If that's your case, you need to talk to this gentleman right over here on the right side. You got to talk to Mukarram, his team, figure out what's the best move for you to make. I hope that it clarifies it for you.
Nice. Yeah, I love it.
All right. Stay out of debt also, says Beto. Yes, absolutely. Give me your fundamental philosophy on debt.
All debt is bad if you don't know how to manage your debt. Okay, all debt is bad if you don't know how to manage
And
it.
some debt is worse than others, but they're all
Yeah,
bad.
yeah, all debt is bad. Especially
Oh man.
if you think that you can have 31 trillion in debt and you still are the most powerful country in the world and you're okay with it, that's not good.
Right.
Okay? That's a problem.
What
So
did
you want to continue to be the most powerful in the country in the world, fix your debt problem.
what did Norm Franz say? Gold is the money of kings, silver is the money of gentlemen, barter is the money of peasants, but debt is the money of slaves.
There you go.
There
I
you
mean, I
go.
agree with that statement.
Absolutely. All right. Well, any final words? I think we're going to wrap up this episode 10 of Mastering Metals. What would you
It was
like
a
to leave
fun
us with?
episode. I loved
10th,
this. Yeah,
10th. We've done this 10 times. It's great.
10 times, and God bless us all. And God bless the audience.
Oh,
Uh,
yeah.
Final word
Yeah.
is don't be too overly analytical about where the prices are right now.
Mm-hmm, mm-hmm.
Don't be don't misunderstand the pullbacks, because if it's at 29 or close to 30, it's doing great, guys. If it's at 2300 gold or even 2280 or 2250, it's doing great. So don't misunderstand the pullbacks, because then you will lose out on the massive wealth creation that it can do in the next year or two.
I heard every word you said. I was just staring at some silver. Great advice. No, seriously, Mukarram. That's great. And if you haven't talked to Mukarram yet, I don't know why you're waiting to. You've got to reach out to him, especially if you've got some money sitting in the markets you need to protect. He's your man. Your whole team is awesome. Your info is in the description of this live stream, this video that drops, and also has been scrolling in the chat, so please reach out to him.
Thank you, Yankee. Appreciate everyone. Stay safe.
All
Stay
right,
safe.
man.
All right,
Thanks
bye-bye.
so much. Take care.